Hello everyone, and welcome back to another video. Today we are going to be discussing smart money handshaking. So before we can learn how to identify smart money handshaking in price action, we need to understand what is smart money handshaking. So think about these large institutions trading enormous size, right? Millions, billions of dollars. They are utilizing higher frequency trading algorithms to engage in price and position themselves depending on their bias. So if they're using their own algorithms to engage with price, they need to have if-then statements that are coded for their algorithm that determines when they buy or sell. So the type of logic behind their higher frequency trading algorithms are if X occurs, Y is triggers. So X, as you can see, if a signature in price occurs, then Y, smart money is going to buy or sell based on how their trading algorithms are coded. And we can see these signatures in price action and how these large institutions are positioning themselves. Now, if we're looking at bullish handshaking, obviously we're looking for price to go up. So if we have a buy-side liquidity pool that we are targeting, as you can see here, what do we do if we have a premium PD array in the way of that buy-side liquidity pool? We want to monitor those key reference points. So here we can see we're looking at an hourly SIBI. So our main focus as price enters that hourly SIBI would be on those key reference points. So the low, the 25%, the 50%, the 75%, and the high of that hourly fair value gap. And whenever price enters a higher time frame PD array, like we're looking at here, I always want to ask myself what the opposing bias would be. So in this example, if we're looking for price to deliver to that buy-side liquidity pool, some of the signatures that we've discussed on this channel and that of course ICT has taught, if we're bearish, we would want to see price go into that SIBI, maybe hit 25% or 50% and reject. We don't want to see the bodies closing above the 25%, the 50%, the 75%, etc. So we want to look, since we're bullish, for bodies to close above those quadrants, those premium key reference points. Now, of course, if we are looking for bearish handshaking, and we have a clear sell-side liquidity pool that we are targeting, as you can see on the bottom of the screen here. What do we do if we have a discount PD array before we reach that sell-side liquidity pool? So it's going to be everything we just discussed, but just reverse it for bearish scenarios. So since we are bearish, we want to see bodies close below the 25%, the 50%, the 75% levels of this discount higher time frame PD array. We want to see closures below those key reference points to confirm that we are going to continue lower through that fair value gap into our sell side liquidity pool target. Now back to our bullish handshaking example, we're going to implement dealing ranges. So if you have not seen my video on dealing ranges, I will link it in the upper corner of this screen now. I recommend everyone go watch that if you haven't already. But we can really combine handshaking concepts with dealing ranges very, very nicely to understand order flow, to understand what price action is doing. So like we mentioned, sticking with that same example, as price enters an hourly SIBI, we want to see closures above 25%, 50%, 75%, etc. to confirm that we are likely to go and get our buy-side liquidity pool target. So as we can see here, the logic behind bullish handshaking is closure above that key reference point, and then it's going to return to a discount to allow smart money algorithms to enter longs. And then it's going to continue higher to the next quadrant, to the SIBI high, to the buy-side liquidity pool, etc. So as you can see here on the bottom left with our little checklist, we want to identify the handshaking. So what would that be in this example? It's that closure above the 50% of that hourly fair value gap. Then if we see price start to retrace, we just want to understand our dealing range. And what does ICT say? We want a long in a discount. So that's when we would start to identify our discount key reference points to see what time and how price reacts off those levels to look for long entries. And of course, we would just reverse everything we just discussed here for a bearish scenario. So if you have been following ES and the NASDAQ over the past couple months, we know that institutional order flow has been bullish. So we can see here, we have this big down day where price is reaching lower and lower, sweeping all of this sell side liquidity here, as well as this clear sell side liquidity pool I have labeled right here. Now, as you can see, we have an SMT with NASDAQ. So as ES came down to purge that low, NASDAQ failed to and didn't want to go down there and make that lower low. So that's that Kraken correlation that we want to see if we are looking for higher prices. Once we see that, where would our liquidity pool be? Buy side liquidity up here. Now, just because we see an SMT doesn't mean you just buy, or at least that's what I don't do. But it's an initial footprint that we want to see if we think, especially after this aggressive selling, that we could reverse and continue to go higher and attack this buy side liquidity pool. So since we have that SMT here, we don't want to see that get taken. We want to see this low remain untaken because it already swept this low and we still have that SMT holding with NASDAQ. Now, this is what we were just discussing with bullish handshaking examples. We have a buy side liquidity pool here that could be a potential target for price to reach for, but we have this large inefficiency in the way. So this is when those key reference points of this inefficiency come into play. As you can see here, I have the 25%, the 50%, and the 75% of this hourly fair value gap. Now, as you can see, like we mentioned, number one, our invalidation level is the dealing range low. Number two here, we're entering this hourly fair value gap. But if we look at the bodies here, are any bodies closing above this 25% level, the first quadrant of this large hourly fair value gap? Not yet. Okay, so how could we use that to our advantage? Well, on this day when price is coming into here and we're seeing failure to close on an hourly basis above the 25% level of this fair value gap, then it would be more reasonable for us to expect a retracement to attack some internal range sell side or to reach a discount of this dealing range. So we could place shorts here. Now, just because I see this failure to close above 25% level, that doesn't mean I just assume that we're going to get the dealing range low and continue lower and the top is in. We still have to monitor these discount PD arrays because, like we've mentioned, institutional order flow has been so bullish the past 2 months. So if we're looking at key reference points below equilibrium from this dealing range low to this dealing range high, we have all these inefficiencies in here. Now this fair value gap is the last line of defense between price when it comes down into here and the dealing range low. So this will be the last area where we should expect some support for price, okay? If price were to come down here and close below there, I would assume that my bullish bias is incorrect and we're probably going to go get this dealing range low, and I would zoom out to a higher time frame and see what else we could be reaching for. Now this is important. This yellow box I have is a new week opening gap. So this is a key level for the weekly range. And ICT always says the bodies tell the story. And that's the simple thing about smart money handshaking here. We want to focus on the bodies. And what is the body doing here? It's closing back above that new week opening gap, that key level for the weekly range, after tapping in to this discount PD array. Now, continuing through this price action, we can see that we've refined the dealing range. Remember, this was the initial invalidation level because this was the low that was formed after the SMT with NASDAQ. And we can see what occurred after we closed above that new week opening gap. Again, that's this small yellow box running across the screen here. After we closed above that new week opening gap, what did we do? We opened, wicked down into it, and we started to see support. Now, what occurs here with this large upwards expansion on this hourly candle? The body is closing above 25% of this large hourly inefficiency. So now I feel more confident in seeking longs. This is a good initial sign that the algorithm is starting to disrespect premium key reference points and that it's reasonable for me to expect that we could start to dig into the next quadrant, which would be the 50%, then the 75%, and ultimately our buy side liquidity pool. So after we close above the 25% level of this hourly SIBI, what does the algorithm do? It returns to a discount level to allow smart money trading algorithms to enter their long positions. So their high frequency trading algorithms are seeing this closure above that 25% level, and now they're allowed, I'll say, to enter long once price reaches down to discount key reference points. Now, real quick, just looking at this dealing range, you could say, okay, we have the dealing range high and the dealing range low. Price didn't even return to a discount of this dealing range here. And if we're bullish, that's in fact the type of signature we want to see, because where are we tapping into? Right here. We have this very tiny swing low right here, low, high, lower low. So these 3 consecutive candles, I'm using the bodies, that's your bullish breaker. Now, where is the high of this breaker overlapping with? Consequent encroachment of the hourly BISI here, this light blue box right here. We come down and tap those levels beautifully. So once we start to see this reaction in price, it's reasonable for me to expect price to not resume down here to this discount. And then we could be going into those 15-minute dealing ranges and 5-minute dealing ranges and 1-minute dealing ranges and get a really precise idea of what is going on in order flow. So to summarize with the handshaking, body close above a premium key reference point, return to a discount key reference point, allow smart money algorithms to enter long. So continuing with the rest of this price action, we need to first focus on the Reaper. So that is this orange box here. So if you're not aware what a Reaper is, ICT has a video of it on his channel, so I'd recommend going to watch that. But it's basically just high, low, higher high. That's your bearish breaker formation. The Reaper, in this case, it's a bearish Reaper. It has to be in a premium of that first A to B price leg. That's the simple explanation of it. But in other words, it's a higher time frame level, higher time frame area where we have to monitor. And it's also, as we can see, the very high of this large hourly SIBI that we've been talking about this whole time. So in the previous slide, we had that close above 25% level, return to a discount PD array to allow smart money to enter their longs here. And then what do? We expanded to 50%, 75%, and the high of this hourly SIBI. So just take a second to think about the logic with what occurs there. But let's focus on number 1, the bodies once price fills out the high of this hourly SIBI and we reach this bearish Reaper. The bodies aren't closing above 50% of this Reaper. So that is a sign after wicking to the high of the hourly SIBI that we could want to reach down for some discount before going to our buy side target. Now we need to talk about this large wick here. Number 1, is that ideal for our long if we're targeting this buy side liquidity? No, it's not ideal. It's not best case scenario. But what occurs after we wick down here aggressively and take out this short-term sell side? We have another SMT with NASDAQ. So ES takes that swing low, but NASDAQ is failing to. So it's another cracking correlation on top of the initial SMT that we saw down here when NASDAQ was showing an unwillingness to go lower. So this whole move up, if we were to look at NASDAQ would be the stronger indice. And remember, the wicks do the damage. So we're sweeping out any longs who trailed their stop loss too tight here, below this swing low, below this swing low. But then we get that SMT. As always, the bodies tell the story. The wicks do the damage. So we wick down there, but look at the bodies. We're respecting this hourly BISI here. Once, twice, 3 times, 4 times. So the wicks are trapping shorts and punishing longs here, but the bodies are telling us that we could still find it reasonable to think we're going to continue higher above this high and ultimately to our buy side liquidity pool. And number 4, what would I want to see to confirm now after retracement to discount? And we see that SMT and the body's respecting this BISI. I want to see us go back above this Reaper and close above it for that bullish handshaking again. But think about what occurred here. Close above 75%, return to a discount key reference point, and then let's go see what occurs. Now zooming in on this bearish Reaper, we can see more handshaking occurring. So this whole move up, we have this BISI here. It would be reasonable, in my opinion, for price to return to that fair value gap. But once we get the close above the Reaper here, after that close, I'd want to see this become a breakaway gap. And I'd want to see this Reaper support price. And what do we do after we close above it? We open and we wick exactly to the tick precisely to the high of that bearish Reaper. So we're treating that the same way as an inversion or as a balanced price range. That's the signature I want to see until my buy side liquidity target, the one we've been looking at this whole time, gets delivered to. On top of this, look at all of this back and forth movement right here inside of this Reaper before we get the close above the Reaper. These are hourly candles. So price is painting back and forth and back and forth. So that's even more of an indication that this should be balanced and that this, by extension of that logic, should be a breakaway gap. And if you want to fact check if this is exactly the low, this, as you can see, very small at the top here, is from December 27th, 2023 on ESH 2024, if you want to go look at that. But of course, we see close above, handshaking into that Reaper, expansion to the buy side liquidity pool. So that entire price action we just went through was all on the 1 hour chart. It was all on the same time frame. And I want to talk about multi-timeframe handshaking. We can work with these key reference points and look for body closes on higher time frames and lower time frames and add that to our arsenal in reading order flow. So for this next example, I want to start with the dollar weekly chart. So as I'm sure most of you have known, as indices have been reaching higher prices, dollar has been reaching lower prices. So just looking at this weekly chart, if we see that low on the most recent candle I have on this chart here, below that, there's no clear swing low there. So what would we target? Well, we have that weekly fair value gap below current market price. But what's to say that we're not just going to reach the high of that weekly fair value gap and then find support in reverse? Or are we going to reach the 25% in reverse? Or are we going to reach the 50% in reverse? We can utilize the lower time frames to understand how deep we're going to dig into that fair value gap. So now down on the hourly chart here on dollar, we can see that price delivered through this weekly BISI. Now, what were some of the signatures that would have told us it's likely that we're going to do that? Well, we want to study the bodies of some of these candles. So we have 25%, 50%, and 75% of that weekly fair value gap. What occurs? We close below this 25% level. We come down, and what do? We open here, right? We open before we close below the 50% level. We open and we go higher to the 25% level. So we close below that first quadrant, then we retrace to a premium, and then we go lower. What happens here? We close below the 50%. What happens on the next candle? We open, we go higher back into that 50% level, and then what occurs? We expand lower. So we can start to see how we can find it reasonable for us to see, okay, we close below this 25% level. It's likely that we're going to reach for the 50%. We close below the 50%. It's likely that we're going to reach for the 75%. And of course, down to the low of this fair value gap. So with bearish smart money handshaking, they're seeing this closure and it's giving them the okay to seek shorts on any retracement to a premium. Same thing here, retracement to a short-term premium. That's the logic behind handshaking. Now we're down to a 15-minute time frame, and I want to look at how we operated within this weekly fair value gap. So if you watched my previous video, we discussed the 16th levels and how to operate in higher time frame inefficiencies, especially when those higher time frame inefficiencies are against your bias. So what we have here, where we previously had just the quadrants of this weekly fair value gap, we now have the 8th levels. So I want to study how price operates within the 8th levels of this weekly fair value gap here on dollar, using the same logic we've been discussing with smart money handshaking. So first off, these are the levels here for the 8ths if you want to add them to your chart. But I added some annotations here, and we can start to see a clear picture of what is occurring as we operate within this large weekly fair value gap on dollar. So starting at the top here, look at this body. This is respecting exactly to the tick the high of this weekly fair value gap. That's what we want to see. After we see that close, what occurs? This discount PD array, this BISI here, fails to support price, and the bodies tell a story. So right here, we're closing below it. And what occurs? We retrace to the high of this balanced price range because it's a BISI and a SIBI, so it's had both stages of delivery. We return to the high of that. But where is this balanced price range residing? Look on the right side. It's that first 8th level of this weekly fair value gap. So if we're continuing to expect lower prices in dollar as we expect higher prices on indices, these are the type of things that we want to see as we operate inside of this large weekly fair value gap here on dollar. So that makes this balanced price range higher probability PD array. Let's continue. What occurs? We tap into this balanced price range. We close below the next 8th level, which of course is the 25% level, and we're consolidating within these levels, 25% to the next 8th level, right, 0.375. And what occurs right here? None of these candles close below. this next 8th level. But right here, we close below. And then what occurs? Something random? No. We return to this premium PD array. So all of those smart money algorithms, they see this body closure here. And then on this retracement, they're allowed to get short. So I want to be thinking the same way as those smart money algorithms are thinking. And this is how I read this price action when we're in these large higher time frame inefficiencies. And what occurs? Closure, retracement to premium inefficiency, expansion to what? The next level, the 50% level of this weekly fair value gap. Look at the body right there, closes on it. And what happens? We open, we return one more time to sweep this liquidity, but we're running back to fill the high of this SIBI, as well as repricing to the 25% level of this weekly fair value gap. After we run that internal range buy side, what occurs? We expand lower, and then we get that close above 50% level. After that close, what happens? We get that retracement to the 50% level. No candle close, no candle close, no candle close. Candle close right here. Open, high, back to the 50% level. And then we expand lower, close below the next 8th level. And what happens here? Immediate rebalance. This is to the tick as well. That's a signature we want to see. And that indicates what? Speed, heaviness, since we're bearish here. And what happens here? Candle opens, retraces to a short-term premium into where? In 8th level, the 75% level of this weekly fair value gap. Then what occurs? Again, we close below, slight retracement, immediate rebalance, and get the low of this fair value gap. So we can see how the algorithm was working on these higher time frame levels as we dug into this weekly fair value gap on dollar. Now for our last example, I want to talk about how we can look at handshaking on 1-minute charts. So before we go down there, we have this 1-hour SIBI on NASDAQ. And of course, I want to look at the quadrants of this fair value gap here. So down on the 1-minute chart, we can see how price acted within that higher time frame inefficiency. Looking at the quadrants, we expand into this hourly SIBI and we close above the first 25% level. What occurs after that close happens? We return to a discount. We return to this order block here, and then we expand above the 50% and the 75%, okay? After we close above those two quadrants, we return back down to a discount to this 25% level, and we already tapped into this fair value gap here. Then we expand what? To the high. Now, there's a cause for concern here. If we're looking for a continuation through this hourly SIBI, we would have wanted to see a body close above this hourly SIBI high, but we did not get that. And we can see at the highs here, after we failed to close above the high of that hourly SIBI, we had an SMT with ES, so that Kraken correlation. So NASDAQ failed to make a higher high here, while ES was able to go high. So NASDAQ, with that logic, is the weaker of the two. So I want to be shorting NASDAQ opposed to ES on this day. On top of the SMT, where is this wick running into? The high of this hourly SIBI, a higher time frame key reference point, and we're rejecting out of that level and failing again to close above the high of this hourly SIBI. And then we start to see that bearish handshaking. We displace lower after failing again to close above the high of this SIBI with the SMT with ES. Then we expand lower and close below on this candle here, the 25% level, and of course, as well as the 50% level of this hourly SIBI. So we start to see some bearish handshaking going on. So what do we expect? A retracement to premium to allow those smart money algorithms to go lower. We have a tiny SIBI here, and we run into that beautifully there. So that can be a short. And of course, we can also see that's right at 50% of this hourly SIBI. So this is a high probability 1-minute fair value gap here. Then what occurs here? We expand lower again, and we close back below the low of that hourly SIBI. So that's handshaking again for smart money algorithms to seek shorts on any retracement to premium. And where do we retrace to here? Some random level? No. It goes right to the first quadrant of this hourly SIBI. So those smart money trading algorithms that institutions utilize are getting short on retracements like this. And of course, targeting sell side liquidity down here. So the main logic again is when we're bearish handshaking, close below a quadrant, reach for a premium. Then we want to reach for a next quadrant. So as always, Thank you everyone for watching, and I hope you all learned something. If you're not in my Discord, that link for the Discord invite will be in the description of this video, as well as my Twitter. I have a lot more videos coming soon, and I'm excited to share more concepts with everyone in a simple and easy way to understand. Thanks, guys.